Hello, everyone. My name is Thomas Smith. I'm the head of business development at Netcapital. Let's give everyone a few moments here to get settled in. All right. This is great. We'll be wrapping up the week before Thanksgiving and end it with a bang with PodTV. Give everyone just a few moments here. All right, we do have some items to run through, so I'm going to get started. But before we get started, I'd just like to touch upon a few housekeeping items. As with all of our companies, when we host our webinars, PodTV is actively fundraising on Netcapital right now. You can invest in PodTV by visiting netcapital.com and searching PodTV if you are interested in doing so. And for those who are viewing live right now, I have just added the link to their investment offering in our chat. Next, I do want to mention that we want this webinar to be interactive as possible. So please, when asking questions, use the Q&A function and not the chat that I just dropped the investment link to PodTV in, but the Q&A function when asking your questions. And when it's time, we'll be answering many of them. Now, I know there are a lot of investors joining us now that are previously invested in PodTV, as well as many who have not invested just yet. We will do our best to cover both sides of the aisle. So with that being said, it's my absolute pleasure to introduce CEO of PodTV, Jeff White, and CCO, Brandon Blackburn. Gentlemen, how are you today?
Great, Tom. How are you?
Doing great, thank you. Really appreciate you taking the time to chat with us. I know you both are extremely busy with the company and the traction that you've been gaining, which I'm really looking forward to diving into today. So to kick things off, I think the best way to start, because you have so much going on at PodTV, is just a general overview of the company.
Sure. Thanks, Tom. I'll take that and I'll hand off to Brandon here back, and we'll do a little tag teaming during the Q&A session. So in essence, PodTV, we're a provider of streaming TV content, and we provide it in a very highly curated and engaging way. We're viewed as a disruptor in our space, and that's really because of the way we go about curating our content in a very genre-specific manner and how we create these very highly engaged, passionate audiences for the content that we create. Our objective is to be the leader in this OTT connected TV space for free ad-supported television, and to do that for genre-specific content that we select and we choose to participate in. That's really kind of the essence of the companies.
Really appreciate that, Jeff. And since, we've been working together for several months now, and one of the things that stuck out to me the first time we spoke is not only it's your background, but not only that, but the team that you've put together and just the uniqueness of the folks involved in PodTV. So can you highlight, talk a little bit about yourself, and Brandon, you as well, and then just highlight the folks that you're working with and the team that is PodTV.
Sure. I'll start and hand it over to Brandon. We can talk a little bit about the rest of our team members as well. I'm a 20-year, I guess people would call me now a serial entrepreneur, although I started my first 20 years of my career was in corporate America in the technology world. I worked for Hewlett-Packard and had various jobs there and responsibilities, from sales and marketing to program management to research and development, up through executive ranks. And then eventually, right before, during the end of my tenure, I was managing a bunch of global businesses, and from industries such as software, graphics design, to printing, to AI, to storage farms, and many others in between as well. So kind of a strong training in corporate America, but then jumped into the dark side, as we call it, right, of entrepreneurship back in the early 2000s. Probably I've now done, probably 8 or 10 startups, invested in probably 100 myself. Really enjoy this space. Most notable one that maybe some have seen either on my LinkedIn or in a bio is I was one of the co-founders of a company called Fingerworks. We were the foundation for the iPhone, which we sold to Apple back in 2003.
And I've been a television producer as a second career over the last 5 or 6 years. My first career was actually with the federal government. I was undercover with the CIA, working in places like the Middle East and Afghanistan. So I've seen two of the most sometimes unorthodox industries there are, the federal government and entertainment, having worked in television. And my role as a producer really shaped what I saw as the opportunity with PodTV, which we'll get into a little bit later, because we saw some of the dilemmas that content creators in particular have run into in finding distribution to get out to bigger audiences and having to work around some of the monopolies that some of the bigger networks had with streaming services at the time. So look forward to getting into that a little bit further as well, based on my background.
Just rounding out, Tom, some of the other team members that I think are critical to our success as part of the executive team, as well as our board. So we have two individuals I'd like to highlight. One, Andy Verderame. Andy comes to us from the TV cable network world as well. And his background has been with companies such as HBO, True TV, and Court TV. So some pretty high-powered names, and also ones that are very genre specific, like Court TV and True TV, very focused on a particular type of content. His roles there in executive management were really around programming and expanding the audience growth within those channels. His most latest project before coming to us was he was one of the creators and producers for a podcast called Talking Sopranos, which is probably the most successful Sopranos-related podcast of all time. We also have John Cordova, who's most recently joined us. He is our Chief Revenue Officer, and John has quite a bit of training in sales, marketing, and operations. He's worked with me in several startups before, so he's kind of part of the core team, and we draw on him quite a bit. He's got experience with companies the like of AT&T and Oracle. So again, some pretty household names and some big brands that you've recognized. So we're looking to him to really drive our revenue, Andy to drive our programming and content so we can reach the largest audience possible. Quickly mention a couple of board members and an advisor. Bill Wheaton is on our board. Bill is currently the Chief Strategy Officer at Akamai. For those of you that don't know Akamai, I believe this is correct, so don't hold me to the facts, the number, but I think they generate something like 80% of all live streaming video goes through their platforms. So they're a back-end CDN for majority of the industry. And Vince Menicelli, who's also a board member, who's got 20 plus years of experience in private equity and raising money from $1 million to $500 million for companies. He's been a long-term partner of mine and cohort in many other deals we've done together. And we've had advisors like Ben Weinberg helping us out. Ben was one of the original employees at Sling TV. So we think we've got a pretty well-rounded team of experienced individuals to take this venture forward and hopefully make it as successful as we possibly can.
Really appreciate that, gentlemen. Jeff, thank you for diving in the team, because that was really, when I spoke with you first and then got to know you and over the past few months, appreciating what you've done as an entrepreneur, and Brandon, your background as well. Which I think the folks that are tuning in right now finding it interesting and well, because we just received 3 questions on how did you come up with this business? I mean, clearly your backgrounds have funneled into PodTV, but how was it conceived? What was the impetus to founding it? Can you dive in further to that?
Sure. I'll kind of give you how we came together, and I'll give Brandon maybe tell a little story about how it coalesced into actually the forming of the company. So Brandon and I were introduced through a mutual friend, a gentleman named Jordan Harbinger, and he actually is one of the biggest podcasters in the space, period. He recognized that I was doing a lot of work at the time in podcasting, and I'd really dived into that medium form in true crime, and was working on some very large shows we'll talk about later and producing. Brandon was doing something similar in the TV space. We both had interest in doing things kind of differently. Jordan put us together and said, I think you'd want to meet this guy. And he told Brandon, I think you want to meet this guy. I think you guys have some real complementary skills and you look at the world similarly. And just to tee up when I say we look at the world, what we both saw separately and we came together, we realized we needed to do something, was there was a big gap between what we'll call traditional content production and programming, and how not just how it's delivered, which is going from broadcast to cable and cable to over the top streaming, but really the opportunity for creators to get into the space and really exploit what they've done and the great work and content that's been created out there. And that unless you're one in 100,000, I don't know, 1 in a million shows that gets picked up by a big network, whether it's Netflix or Amazon or NBC or whomever, right? How do you get high quality content that could really ring true to a strong, passionate audience out in front of people? And so we saw that gap, and I'll let Brandon kind of take it from there and share specifically how we came across some opportunities and said, okay, let's go do this. Let's go test it and let's go see if this our theory holds true, and then let's take it into a formation of a company and a commercialization.
Yeah, and PodTV is really it's an intersection that caters to some issues that content creators have been having with getting their products and their programming out in front of the audiences that they want to target. That's something that we really had an appreciation for, the challenge of which as producers. And then on the consumer side, PodTV also speaks to, we built it in a way after recognizing some of the vulnerabilities that paid services have, and of course, a massive service like YouTube has in terms of overwhelming the consumer with just a plethora of offerings that kind of gets the viewer and the audience a little bit confused about what to watch and what to target when they don't know what they're in the mood for. So that was really the impetus for the idea. In terms of how we started targeting genres, we looked at those that checked a few boxes, which we'll get into in more detail here in a minute. We started with a true crime channel. True crime is obviously to anybody who's watched TV and has any streaming service, you recognize that they all offer true crime to some degree, and there's a reason why it's one of the most popular genres in the world. And then we started to look at, okay, what other genres are fans passionate about? Our audiences coming to weekly in droves and in large numbers? What type of genres are people talking about day in and day out after they watch it? What have some of the biggest social media communities and so forth? So that led us to our second channel, which is Pro Wrestling TV. Personally, I had been a pro wrestling fan my entire life. In my first career over in war zones, in between the rare downtime that we had, wrestling was a big escape for us. And I got to really know the industry and see that there's a bunch of great content being made out there that doesn't necessarily have mainstream distribution. So that really shaped our thinking into what PodTV was at its inception and what it has become over the last year or so.
Really appreciate that, guys. And so now understanding the business and the conception of it, what problem is PodTV trying to solve?
Brandon, you want to take this? I just teed up the slide for you, so if I jumped ahead a little bit.
Oh, no, absolutely. So as I alluded to just now, there's really a dilemma across the entire media landscape. So when we look at it from the audience or the consumer standpoint, there is a term that has been coined over the last 2 years or so called subscription fatigue, not only from the paid subscription service side, but just the number of platforms and options that are available. And this has really become reinforced over the last year or so as we've seen the free services start to outgrow the paid services like the Netflix. So you see a statistic there, nearly half of all TV viewers just feel overwhelmed with the discovery component. And personally, anybody who's joined us here today has probably run into that, which, my wife and I had just 2 or 3 nights ago. We wanted to try and find something to watch. We spent nearly a half hour on Netflix and another platform just scrolling around because we didn't know what we were in the mood for. So that really has been a challenge for the consumers. They have started to see that there's just too many options and it's becoming overwhelming. And then you move over to what the creators are experiencing, this creator dilemma. And YouTube is certainly out there, and it's been a great conduit for creators of all sizes, all categories, all genres. but it also has become very crowded. It's very hard to stand out. And again, you have that discovery problem. You have the as a creator, getting your good programming, quality production value discovered in the masses, unless you know how to navigate the algorithm, unless you know how to compete with some of the first adopters in that space that now have billions of followers or billions of views and really dominate that space. So those were the two biggest pieces of the pie, so to speak, when it came to what we were factoring in and how we've gone about building our channels and building out this company.
Thanks, Brandon. And I think with that, it's appropriate to get into, okay, understanding founding the company, the problem that you solved. Can you bring us through the platform and explain that?
Sure. Maybe one of the best things I can do actually is show Tom the platform, how it works here, and let Brandon maybe take us through what the look and feel is. I mean, then from there we can kind of dive into our business model. But I think the best way to experience this is to actually, have the viewers here today see the product in action if they haven't seen it or tried it before. So
Sure.
I don't know if you can see that up on my screen very easily. So right now I'm going to go back a step here if I could and go back to, this is an LG TV I have in my house. And you can see here, this is the home screen. And Brandon, you want to just take it from here and I'll just kind of be your scroll dolly here.
Sure. So whether you have an LG or a Vizio or a Samsung, this portion of your screen is going to look relatively the same. And this is the space that we really cater to. So we offer these free ad-supported networks, and you can find them in the app stores of these TV. In this LG case, you can see both our wrestling and our true crime are right there, categorized along right next to Netflix, Amazon Prime, Hulu, some of the leading ones. So that's the space that we target in terms of getting in front of an audience, because it all is about, in this space in OTT, it's all about living and building within the smart device infrastructure, if you will. So from there, Jeff just pulled up our pro wrestling TV, and there's two elements to all of our channels. You have our linear channel, which is scrolling up at the top, and that is that's essentially a cable channel. It's just a free channel that provides 24/7 programming according to that genre. So in this case, 24/7 wrestling, professional wrestling content. Our true crime one would have 24/7 true crime content. And that linear channel not only lives within our app, but it also lives on some of the other FAST services. Jeff mentioned earlier on the FAST acronym, free ad-supported TV. So anybody who's joining us right now, if you've heard of services like Tubi or Pluto or Plex, those are all essentially free cable services that are available digitally. You also have the smart TVs themselves, like LG and Vizio, starting to launch their own basically cable service within the smart TV when you buy one. So our linear channel is meant to live in those places as well, and they've been very successful for our distribution. And then beyond that, as Jeff is scrolling around, you have our entire video on demand streaming network, which in the pro wrestling TV's case has over 3,000 hours of content. Our linear channel, by the way, has over 80 hours of new content a month, which is significant in this space, because the minimum that your Plutos of the world and your Rokus and your Tubis are looking for is 40 hours. So we're vastly exceeding any minimum requirements for new content. But as you can see, the user interface is not unlike you would experience with a Netflix. And it's all content that is free available to anybody who simply downloads the app. And there are a few short ad breaks an hour, which people, in terms of viewing habits, the data is showing people are gravitating back toward free ad supported. They don't mind a couple shorter ad breaks an hour, especially when they see brands that are of interest to them and brands that are consistent with the genre in which they're watching at the time. Over the next few months, as we get into 2023, We're also going to build and invest in some added capabilities to enhance the user experience, to include some chat features, trivia on the screen, and some other elements that in particular are meant to really speak to the engagement desires of the youngest demographic that is the most sought after by the ad buyers, which is that 18 to 30-year-old demographic. So as you can see, Jeff just pulled up one of the videos that's available on the video on demand streaming service. And it's just that simple. The reason that we focus too on genre specific is we are taking the guessing out of what are you in the mood for as a consumer. So we know the people coming to Pro Wrestling TV, they are wrestling fans, and they're gonna, the data shows that they're gonna stick around, and after they discover something new, we offer the content that also keeps them around, that keeps that stickiness in between releases of new episodes each night on our linear channel. So it's been a very effective strategy in terms of our content lineup and offerings that we've learned over the last year since launch.
Thanks, Brandon. Just one note, you might have seen at the very beginning when we first fired up the channel, there were some ads that popped up there, and those ads you see more and more are the exact same video ads that you see on traditional cable TV or other streaming platforms. So the quality of our advertising network is very strong. And so you'll see brands like Liberty Mutual, Geico. I believe we just saw a Johnny Walker ad that's popped up there. Chevy truck, Coca-Cola, a lot of the big brands that you are experiencing on a traditional cable experience or even an OTT streaming experience, you'll find on our channel as well.
Really appreciate that, Jeff. And Brandon, thank you for walking us through the platform, and Jeff for the demo. Backing into what you're doing, right? And then so let's shift over now, understanding everything and hearing it from the horse's mouth and the leaders of the company. Market size. Jeff, when we first spoke, I was shocked in a way that I knew it was big, but when you got granular on how big it is, what's it going to be in a few years and how it just keeps growing. Can you touch upon just the market opportunity here for PodTV?
Sure. And Tom, we haven't spoken on the market size in several months, but a lot more data is coming in as it's rapidly changing, and the market continues to grow. A year ago, the projections were that this year was going to be $21 billion for the OTT space. It looks now, if you look at industry reports that are widely available from multiple sources we can reference, it's closer to $29 billion. The fast OTT space, so that's the free ad-supported space, is at a $4 billion clip. Just recently, in the last month or so, Pluto, who's one of the major free ad-supported platforms out there, they're part of a publicly traded company, Viacom. So they're reporting actually some of their key metrics. They just reported $1 billion in ad revenue on their platform alone. So it's a massively scaling space. People like Roku are driving it, people like Pluto, Zumo, et cetera. Some of the other key growth factors, you'll see a compounded annual growth right now in the fast space is about 20%, even in the downturn of the economy. So one of the fortunate bets we made a year and a half ago was not to go full subscription, but to do free ad supported. And that turned out to be fortuitous, right? Because that continues to grow as the subscription guys are having trouble. If you read the reports in the last few weeks from Paramount and Disney Plus, how they're starting to see some tapering off the subscription. And then the unheard of announcement from Netflix that we're going to have an ad-supported network, right? Where pre-pandemic, they were saying the opposite, right? That, we're an ad-free platform. And again, listen, they offer a great product, great service, but I think what you see is that particular type of offering, eventually all markets have limits, and so it's really shifting towards the fast space. And it reminds me a lot of back when we were getting into the technology space around cell phones. And if you remember, the original cell phone market took off and exploded, right? Mobile phones. And who were the two big players? It was Motorola and Nokia, right? Well, both of those guys had multi-billion-dollar runs. They had great market share. They dominated. They plateaued. You don't even know about them now. And a computer company called Apple came along and redefined things, right? So, and then they've pulled along a bunch of new competitors like Samsung, High Tech, and some others. But I think we're hoping that this is the beginning of a long-term trend in the FAST space that we're participating in.
No, Jeff, thank you for diving in there. And we've gotten a couple questions regarding pivoting into, okay, explaining the market size. It's rapidly growing in its biz, but the business model. So how does PodTV make money, and why is this an interesting offering for investors?
Sure. So what I'm going to do here is quickly just jump to a screen share, because I want to show a slide that I think kind of encapsulates basically how our business model works. Are you able to see that there? So it speaks to our, so there's really four legs to our platform, and they speak to what our platform is and how, and more importantly, how we run our business and what our business model is. So the first thing you've got to do is have great content, right? So we have genre-specific video content we go out and source from creators that are in the audio space and podcasting and have video complements, people in the YouTube space that are getting millions of views per episode, but aren't able to really exploit and monetize the way they'd like. So we have this highly focused effort in getting curated content and figuring out our programming for each genre. So that's one pillar. The next pillar is, okay, where are we going to distribute this? Connected TV distribution. Brandon's going to speak to a minute about our accomplishments, but we are now in over 200 million devices and homes across the globe. So you really have to have a strong distribution strategy. So really it's about finding the content, taking it to market, having the partners that can get you in front of the consumer. No longer can you be in one platform or in one place and expect to reach the size of audience that is going to make you a long-term success. And so you're just denying yourself opportunity if you limit yourself and forcing people to go to where they want to go. The world today, people go where they want to go, watch where they want to watch, do what they want to do when they want to do it. So we need to be there. Next is the business model. One of the unique parts about our business model, why we're considered disruptor, is we use social media in a very different way than what I would call traditional streaming platforms do. Typically what you'll see is new content comes out in programming. That program is either created by what's called owned and operated networks, right? So that's a network that owns all the content and they create themselves, or they license it in. And there's nothing wrong with that model. It works really well. It will continue to work well. One of the things, though, that we saw a gap in that speaks to our business model is using the talent from the shows, the creators, as part of this creator economy, which a lot of us hear about, right, to actually help drive the success. So the only way that's going to work is if you do rev share, and we'll get into that in a minute. But so by sharing our revenue with the content creators, the rising tide lifts all boats. That in turn gets us to partner with the talent and for them to actually go out and market their programs, their shows, their episodes, their movies, their documentaries, their matches, their wrestling matches on a regular daily basis to get people to come watch. Because every time someone watches, they're making money, right? So the example I'll use is Bryan Cranston didn't necessarily go out and do day in and day out promotion for Breaking Bad when it was at its peak, right? He would go out and he would get on to Tonight Show, or he'd be on an interview with this podcast here and there, but he wasn't. Why? Because he was paid for the show, right? He was getting his salary. Nothing wrong with that. But imagine the power of tens of millions of social followers that follow this talent. And if that talent could reach to them and say, hey, this is my show. I'm not just in it. I'm a producer, I'm a creator, I'm the host, I'm sharing in the success. So we drive that social media experience out into the marketplace through our talent partnerships, as well as on our own through paid advertising and barter shares that we do with some of our distribution partners, where they'll promote our channel and we'll promote their network. The last bit of the stool is a revenue generation, which is very simple and straightforward. We do a rev share with our content providers and with our distribution partners, okay? That comes in three main formats. It comes in straight advertising, which is done in a programmatic way, which means ads are programmed in. So when you saw the example of Pro Wrestling TV that Brandon was giving us an overview on, you saw ads coming up. They're served from the network side. They get placed in, they're pre-recorded. it's a traditional experience. That's one. Second is sponsorship, and we'll talk more about that in a minute because that's a big area of growth for us. This is where advertisers get very integrated into the programming itself. We have to partner closely with them, and by doing so, we're able to really drive some significant exponential revenue opportunities beyond traditional advertising. That's what John's focus really is. John Cordova, I mentioned earlier, is to go get those sponsorships with big sponsors who want to be, on the ring skirt of a wrestling match. They want to be product placed in one of our shows on true crime, right? They want to have the host talking about the product, maybe using it and while they're taking a break or while they're describing a story or a scene or something. And the last method for revenue generation is around pay-per-view. One of the areas that, and I didn't mention this back in some of the growth opportunities, but one of the areas that's emerged in the last year that's becoming extremely hot in this over-the-top streaming space is live events. And that speaks to mainly entertainment and sports, right? So that's why wrestling is a great next step for us, because it's just a plethora of live events. All our promotion companies we work with do these on a weekly or monthly basis. So we're putting up shows that are live and new virtually almost every night. I know, Brandon, what would you say? 4 or 5 nights a week at least we're putting up something, if not more?
Yeah, we have new episodes at least 4 nights throughout the week, Sunday through Saturday.
So that lends itself to sponsorship and also lends itself to pay-per-views where you might have a tentpole event, once, twice a year, maybe once a quarter, right? Where it's a special event and we can monetize that. And that really depends on our partners and if they really want to partake in that. One of the other quick things I do want to cover, we have a philosophy around our business model, right? And it's how we're leading the industry and getting content and audience growth. So it's find them, reach them, keep them, profit from them. So finding them is, how do we find the audience, right? How do we go out? I just described that. Reaching them is our distribution partners, which you see a small sampling here of. Keeping them is really about the content. Do we have high quality, engaging content that these passionate fans are looking for? And they'll let you know right away if they're watching or not, right? So one of the things we're proud of from a result perspective is our average viewer length in minutes, which is a key metric in the industry, maybe the number one metric in the over-the-top streaming space. We're in the 20-minute range, as an example, on our pro wrestling TV channel, and we're about 14 or 15 minutes on true crime. The industry average is about 8 minutes. So when you can double or more, right, that's significant. That's why the platform partners take notice. That's why some of these people say, wow, with that kind of engagement, we want you on our platform, because they want people staying on their platform. We're agnostic. We don't care where you watch our show. We just want you watching it. Then obviously, we want to profit from this by the ways we just talked about. I think one of the best ways, if I could just take a moment, Tom, this is something I know you've heard, but this is an interview that was done by the CEO of Major League Wrestling, the most recent promotions we signed to our network. It's a major win for us. They're a top 4 or so network wrestling promotions, and having them on our network is really making a huge difference. We'll talk about the growth it's driving in a minute, but the CEO, Court Bauer, was on an independent podcast, so maybe a month or so ago, and he talked about why he picked PodTV out of all the opportunities, hundreds of places that were trying to woo him to get his live events on their channels in the sports and entertainment genre world for streaming. And he selected us, but just take a minute and listen.
Stream the Battle for free. We'll talk all about that in a minute. It's great to be back.
No, it's great. And how good does it feel for you? Because you and I have been talking, even going back to the pandemic when there was the shutdown, of now finally finding a home for MLW.
Yeah, the crazy thing is the pandemic just jams up everything. Not only were we fighting 2 billionaires, that pandemic hits, like, what are they going to throw at us next, right? A tsunami hitting New York? I don't know. So, you have that, and then we had a deal, and then I would say about triggering another lawsuit. Then a competitor jams up that deal. So then we're back out in the market for a year. We're having great conversations, and we're pretty far along in negotiations with a top player in the streaming fight space. And the COO actually says to me during the negotiations, verbatim, "Have you talked with Pro Wrestling TV?" I'm like, "Huh?" He goes, "Do me a favor, please don't." And right then and there, I knew, all right, our next call, our next meeting, we're setting it up with these guys because they're clearly disruptors in the space. And we had a great conversation with Brandon and the team at PWTV. And within a week, we were really impressed, and conversations flowed, and we closed the deal soon thereafter. They just boarded AAA. They have some great wrestling from around the world, all free, and it's endless. Every style you could think of. Every Thursday, stream the Battle Riot for free. We'll talk all about that.
So that's just a quick sample, right? And this is, you can look this podcast up. It's on Sirius XM called Busted Open. But that was, one of our partners speaking on our behalf, unsolicited. Obviously, we love hearing that, but I think that speaks to, what our business model is and the kind of partnerships we're able to attain.
No, absolutely, Jeff. And so we got a couple questions. I think you addressed it for the most part, but the reach, right? How are you getting people to be informed about PodTV? And you're closing these massive partnerships, which is extremely exciting. Can you talk about, now that we're, Thanksgiving's just right around the corner, and then we're going to be in Christmas, almost to the end of the year, some highlights in 2022 over the last 11 months that you and the team are proud of?
Sure. Brandon, you want to cover some of those?
Oh, Brandon, you're muted.
Thank you. Appreciate that. We will end this calendar year with nearly 1.5 million unique users between our two channels. Q4 of 2022 is going to reflect 130% growth from Q3 in terms of not only our users, but the sessions, the number of hours streamed per month, and a couple other key metrics that those in the OTT space and the ad buyers, particularly in this space, are really looking at. In terms of some of the partnerships, obviously we've talked about where you can find our programming and our channel. On the pro wrestling side, we will be launching with a couple more services by the end of this year, including Fubo TV, which is a tremendous opportunity because of the focus that they put on sports programming. As Jeff just mentioned, we also just signed one of the biggest wrestling companies in the world, Major League Wrestling, and there are a couple others that we're in negotiations with after the success of that deal. On the true crime side, some of our leading shows, like Our Thing with Sammy the Bull Gravano, continues to generate viewership across all platforms where we put it out in the 7-figure range a month. And then you look at, as Jeff mentioned, our channels are available in over 200 million households throughout the world. That plus the growth in terms of our relationships with the ad buyers and brands that are looking for these opportunities, looking to get in front of our key demographics. All of that speaks to a very optimistic forward-looking year in 2023 for us.
Really appreciate that, Brandon. It's just, and Jeff, I'll echo it again, from when we spoke, 5-6 months ago to where you're going now. And I didn't know about the unique users. That's incredible. I feel like anytime you can go from 6 to 7 figures, it just puts you, on another level. So congratulations.
Actually had a 12x increase. We were looking at this the other day, looking at prepping for the call, Tom, and we actually didn't realize, we knew the numbers, but we didn't realize it was actually a 12x increase in less than 10 months, on a month-to-month basis. So, we're very happy.
Jeff, if I can piggyback off that too, Tom, another thing, it's a little more anecdotal, but it does, I think it is telling. We're starting to see in terms of recruiting content, the bigger content partners are starting to come to us because they understand our model. They're very interested in the model. They see the opportunity there. So we have established ourselves with our respective brands as being able to deliver on what we laid out here for some of the bigger partners in our respective spaces. So that's a data point for us as we start to see them calling us and not the other way around necessarily.
Well, Brandon, that's best case scenario, right? When you're seeing the influx of your inbox there, or your cell phones going. It's just, again, it's a testament to what the both of you and the team at PodTV have built. All right. End of the year is coming. Talk to me about Q1 and Q2 of next year. What are you most excited about? What can folks, people who are users of Pod TV, but also investors, what can they expect, say in the next 3 to 6 months?
Sure. So one of the key metrics that we had for this year, Tom, was building the audience, right? And so you had to have great content and great distribution partners to build that audience, which we've started to do. And we think we're well on our way. We're not nearly where we want to be longer term, right? But it's one of those ever chasing goals, right? You can never be, big enough, grow fast enough. But we've now, this quarter, we're starting to hit the critical point of scale where we can go to bigger advertisers directly and start soliciting their business. So one of the things we'll focus on in Q1, and no promises, right? I don't want to be forward looking and promise something we can't deliver, but a big initiative for us, and John's is on his shoulders, he's listening in, is to drive some of our sponsorship opportunities. We now have the scale to do that and working directly with the sponsors and their agency partners to take their brands out. So that's one you'll see in Q1 and Q2. Hopefully you'll see some big campaigns kicking off in Q1. A second initiative that we have going that Brandon just referred to around content and adding additional content and partners here. We're in some discussions now with some that we can't talk about because they're not done. What we can talk about is something we're doing ourselves. We're developing some of our own, as we said, some shoulder programming. So you'll see some of that coming out in Q1 where we can fill in around the live event promotional opportunities. And thirdly, is we're going to be adding another network in the first half of the year. I'll tell you this, it's in the music space. So it's got all the attributes. If you think about what we just talked about, right? Super passionate audience, very loyal. I'll say niche, although it's a large niche, right? Everyone loves music, but everyone likes their own kind of genre. But it also speaks to the live. I mean, live is hot right now. And honestly, we're getting into some of the bigger distribution platform players because we have live content and it's high quality. They come, they look at what we have on their competitive channels and they say, we want you on our channel. We're interested in bringing you over. We believe more of that kind of content can only serve us well going forward.
No, it's amazing, Jeff. And I do want to highlight the quality because I've been on Pod TV, watched the streams, live events, and the quality is second to none. And obviously a testament to, what you're building. And Jeff, you cracked me up. It's so funny because the first time we met, you could tell by the accent, you're like, oh, you're a Boston guy. And I was like, yep, let me guess, Jeff, you're a Boston guy too. And when I ask you about the progress and where you want to be, or where you are now, and then where you want to be next year. It's like, we're not where we quite want to be. You have that drive and just that. I think one of the more positive things of us Bostonians is we never settle. And I getting to know you, Jeff, and Brandon. It's you guys will go through a brick wall to get this company where it needs to be, and I think it's a testament to the entrepreneurs that you both are, and it's speaking to where Pod TV is in a relatively short amount of time.
Yeah, thanks. Yeah, I think our team really exemplifies, like you said, that grinder mentality, right?
Yeah.
I'm from Boston. I live in Philadelphia. Brandon, and obviously in one of his prior careers, had the ultimate kind of grinder experience, right? Where it's life or death.
Yeah.
John's used to slugging in the mud every day and saying, it's never good enough. Andy and the rest of the team, Nick and Jared and Bill, they're all the same, right? We're kind of wired that way, which is, sometimes we can be our own, worst enemies, right? Because we're beating on ourselves so hard, but it's like, we're never satisfied. We always want to do more and keep growing.
Well, in my opinion, Jeff and Brandon, it's a positive trait. And I hope you guys keep down that path because just from my experience, seeing what's happened over the last 6 months, Jeff, from the first time we spoke until now, it's just, and I mean it, it's incredible. So I think, folks that are listening now, and then we'll hear this in the future, check Pod TV out, netcapital.com, search Pod TV and review their offering page because it's constantly evolving in a way that's exciting. And with that, gentlemen, so we've covered a lot here. And also I appreciate everyone who's been submitting questions and so engaged. I know we blended a lot of them together with, the main focal point of each. Exits. So, Jeff, in your career, you've been successful having exited businesses. Brandon, you as well. Talk to us about a couple potential exits for investors.
So there's really kind of 4 ways to go. And I'm going to tell you right now, if I had a crystal ball, I'd be doing that for a living, right? Versus just building the companies, I'd be picking the other companies and deciding when they're going to exit and how. But the key to, let me start by Tom, the key to having a good exit is always building a great product or service, right? Because you have to be attractive to somebody. Somebody's got to say, wow, either I want to invest in them if it goes the public route, right? Because they're doing better and my money's better suited to be with them than it is somewhere else. Or their company, if it's an acquisition, is better with us because we can benefit from what they're doing, right? They do it better than us, or they can provide something we just can't provide. So with that being said, I mean, a couple things. One, it could be a straight up acquisition in the streaming space, right? At some point in the future, right? So somebody that's already in the space says, listen, we want to, grow with the same kind of focus we have around, maybe genre specific content around live events. Some of the engaging stuff I didn't mention that Brandon touched upon. And Brandon, thanks for mentioning some of the interactive stuff we're going to be doing early next year too. Some real breakthrough stuff from a community perspective within the platform on a second screen you can do while you're watching. So somebody may be attracted to that and want to acquire us. Secondly, could be a private equity firm taking us out in a roll-up, right? There's that's going on. I think the SPAC world has kind of cooled off, right? So it's not something we see on our horizon, but certainly there are companies out there that are looking, private equity firms saying, hey, we're going to bring a bunch of small companies that all have unique attributes together and merge it. The third way is going public. And that's another process that could happen potentially. And that's something that could be of interest down the road. And the last one that is maybe unique to us is given what we're building, there could be a scenario where we're not selling the company or getting acquired, right? Or merging as a whole with somebody. We have an asset somebody wants, right? So there's a monetization event, if that makes sense, right? So it's like we're building up all these tools and these capabilities, and someone says, I want this one, but I don't want the others. That's a potential outcome. So we're tracking all four, but really the focus is just build a great company, have lots of users, big audiences, great content, start showing, strong revenue growth, and the opportunities come. I've seen that for 20 years. That's when opportunities come your way. And that's the focus for, the foreseeable future. The next 18, 24 months is really heads down. Let's just build this baby out. And, I've always found every single time when you do that, the door, you get the phone call, you get the email, someone knocks on the door and says, hey, can we talk? We see what you're doing.
No, and you guys are proof of that. You've lived it, you've done it, and here you are with PodTV. And gentlemen, this has been great. And I know we're getting to the end of our time here. So in the last couple minutes here, why now? And I know, we've talked about a lot of it in the excitement momentum, but right now in November 2022, why is now the time to invest in PodTV?
Brandon, you want to take the first crack at it?
Sure. I actually think we timed this fairly well in terms of what the industry trends have become and what the data has shown. We are very well positioned to build off of the trends of the free ad supported television combined with OTT, combined with all of these smart devices manufacturers looking for the type of content, the type of genre division that we offer through our channels. And so when you look ahead to 2023, as Jeff mentioned, even some of the biggest in the space, like Netflix, and then on one end of the spectrum, and then Pluto on the other, are focusing on the type of model that we have built with in mind. So, and then the genres that we have targeted very much enable the content to be available in a bunch of different places in different sizes as well. And I think that's a really important distinction too, because if you're an advertiser, you want that sought after demographic, 18 to 30-year-old in particular. Well, their viewing habits are going to be different than the 35 and older crowd. So the type of genres we have built out and the ones that we have planned in the future lend themselves to the different viewing habits across the different demographics that span different generations. So all of that, I think, speaks to where we are positioned and our ability to play and cater to the trends, not only from the viewers but the content creators as well that we're seeing.
And I'll just add, that's great, Brent. I think we're a disruptor, and we don't use that word because we feel like that's who we are. That's what we're called. You heard it in the audio from court, right? And when you're a disruptor, you're changing the way things are done in the industry, and that doesn't, it creates opportunity, right? Because it's turmoil, so it creates opportunity. So I believe we're creating opportunity as a disruptor, and when you do that, the rewards come, and it's a good time to get on board with us, because when you're in this kind of space and it's moving very rapidly, you just don't know what's going to happen, tomorrow or the next day or the next quarter. I think we're in a very good spot. As Brandon said, all the trends that are going on, positive and negative. Right now, the wind's blowing in the right direction for us. And if you're an investor and you want to invest in somebody who you believe has, the ability to disproportionately kind of win, right, in a marketplace, I think we're very well positioned to do that. And we have all the right attributes, as Brandon articulated, that people on the outside world, whether it be we have three partners, right? We have three types of clients we serve. We talk about it all the time. We serve our content creator partners, and that's a creator economy. They don't want to be told what to do. They want to own their IP. We let them do that. We serve the advertisers who pay us and and allow us to live the fight another day. And then we serve the distribution partners who get us in front of the audiences we need to serve. And I think all three of those see us in a very positive light right now.
Really appreciate you both diving in further there. And I know we're getting to the end of our time, but Jeff, Brendan, I know how busy you both are, and really appreciate you taking the time just to dive in full circle on PodTV. And also thank you for everyone who tuned in today. If you're interested in investing and learning more about PodTV, netcapital.com, search PodTV. And in my opinion, Jeff, you and the team and Brandon, you did a nice job laying out the investment opportunity and where it's going. And today, folks got to really hear from the folks that are driving the bus, which is unbelievable. So thank you both for taking the time. Again, understanding how busy you are, really appreciate it. And looking forward to chatting soon. Thank you, gentlemen.
Thanks, Tom.
Thank you, Tom. Happy Thanksgiving. Appreciate it.
Happy Thanksgiving to you guys.
All right.